We speak to Gavin Lomberg, the CEO of Ooba Home Loans. Gavin, thank you so much for your time. Let's first unpack what the latest move means for the property sector. I'm sure it's much relief, and as much as many of us would have wanted a further or bigger interest rate cut, but we'll take 25 basis points at this stage.
Good evening. Thanks for having me. Yes, indeed. More good news for consumers with the latest rate cut. The latest 25 basis points cut obviously takes the total cut for the last sort of 12 months to 125 basis points, which for major, in most households, would represent quite a significant saving, both in terms of the existing bond repayments and also very encouraging for new homeowners wanting to enter the market. Certainly making it a lot more attractive for them to enter the market, specifically first-time home buyers.
Gavin, what has also come up is that the sector's expectations around further relief are embedded then in what the Reserve Bank governor indicated, where inflation targeting could see a change, where the target is lowered to around 3%, which would be even bigger of a relief. The viewpoint of the property industry in that regard, where do you sit? Because it would mean a frequency in the monetary policy easing. At this stage, the forecast, if we are at that lowered 3%, would be at least 5 more repo rate cuts.
From a property perspective, look, it really sort of hinges on every time the MPC sit. We've taken a slightly more conservative outlook, whilst we've seen 125 basis points cut over the last sort of 12 months. It's highly unlikely we will see a further 100 basis points cut over the next 12 months. I think we can expect it to be slightly more circumspect, the MPC. The other issue to factor in is we don't really know what tariffs are going to do and how that's potentially going to impact the MPC's forecast and economic outlook going forward. And that's certainly one of the unknown factors that might temper the frequency of the rate cuts that we've seen in the past 12 months. So we from a property market perspective, we're a bit more circumspect in terms of our forecast for the next 12 months.
I'm glad you raised the latter. That's exactly where I wanted us to go as a parting shot in terms of the industry's concerns that linger, particularly with the South African economy, especially because we are not dealing with only domestic matters, but the global dynamics have changed quite significantly with regards to uncertainty around the US.
Absolutely. And for that case, we've probably seen that already impact our first-time home buyer market. In the last 12 months, we've only really seen that tick up by 1%. So a year ago, our percentage of first-time home buyers, as an example, was 45% of all new bond applications. It's ticked up to 46%, notwithstanding the 125 basis point cut. Ideally, you want that up to closer to 50%. So my sense is that you still have this element of people keeping their powder dry in light of, not just local socio and economic politics, but also global politics. And I do think it's still playing a role in people's decision to make what is effectively the single biggest investment decision of their lives. So time will tell, but in the short term, the 25 basis point cut has been very welcome.
As a final point there, Gavin, the question that I must ask you before I let you go is what we get often. Is it a buyer's or a seller's market still?
Depending on which province you're referencing. Certainly up north, we're seeing an uptick in the selling market, especially in areas like Pretoria and the Free State, where sales have sort of ticked above 10-12%. Property prices have become a lot more favorable for them. Whereas in the Western Cape, the barrier to entry in terms of buyers has gone up. So sellers in the Western Cape would certainly see this as quite a favorable market to put their property on the market.
Thank you, as always, for your contribution. Ooba Home Loans CEO Gavin Lomberg.